Walt Disney couldn't get a bank loan, especially early in the days, so he used this financial strategy to fund the most magical place on earth,
Disneyland.
Now, if you know about Walt Disney, of course, he was the dreamer. He was the visionary, right? If you know the story about Walt versus Roy Disney, Roy was like the numbers man. He was the finance guy. He was like your accountant. He wanted to make sure that the money was there. Walt Disney always had the big dreams, always trying to do something bigger and better and innovate. That's why Snow White was so revolutionary it came out. Even Bambi was huge for them because they're like, he's doing things with animation that nobody had done before. But it's freaking expensive to be Walt's brother if you're Roy Disney. Well, this is the thing. I think about Snow White. Like Walt initially had a budget for $250,000 to do Snow White. He told Roy it'd only be $250,000. Then he told Roy it'd be $500,000. He's like, and then eventually he told Roy it'd be over $1 million. He's like, Roy didn't bat an eye. Why? Because Roy couldn't. He was frozen in fear. And that's what Walt Disney was. He was a big dreamer. Well, of course, as you know, one of his big dreams was Disneyland. He wanted to set that place up. Now, he wanted an amusement park that was a place that, of course, amusement parks, obviously you guys may or may not be old enough to remember this, but amusement parks weren't always the best place to be. I realized this when I went to the Utah State Fair, and I realized some of the craziest people I'd never thought I'd see. I mean, you see people in Walmart or dollar store. It's even worse when you go to the State Fair, right? And so State Fair, especially when there's a lot of drinking and things like that, can get pretty disgusting. He wanted to create a place that was clean, family friendly, and heck, didn't even have alcohol. Of course, everybody thought it was a stupid, crazy idea. So Walt wanted to make it work. Banks were turning him down. They didn't want to do it at all. Eventually, there was a struggling company called ABC. You might have heard that network before, right? They're teamed up with Disney now, and now they ruin our Star Wars and all that kind of stuff. Well, ABC at the time was looking to get bigger. And they said, you know what, Walt, we can see it. We're okay with it, but you got to come up with a lot of cash yourself. If you put in a lot of this cash up front, then we'll put in the rest of the money. So what did Walt do? He got liquid, right? I talk about people getting lean, get liquid, get out. Well, he did all three. He said, all right, I need to start getting my financial house in order, make sure we're a little bit tight on money for now. I'm going to sell my vacation property and get the equity out of that. And I'm going to use my life insurance. Now, this was not term insurance. Just so you know, term life insurance didn't come around until the 1970s. This is much earlier. And so term life insurance wasn't even around. Whole life insurance was the only option at the time. And in my opinion, it still can be the best option, especially when we talk about this infinite banking stuff, right? And so he actually used not the death benefit, right? He used this tax-free savings account inside of it. Understand that whole life insurance, you have a death benefit, but you also have this tax-free high-yield savings account. So what's not paying for the insurance spills over into this account. This extra money spills over in there, and it's money you can actually access. It's liquid. But banks also like to use it too. You can put liens against it. I've actually had clients do this where they've bought properties, putting a lien against their life insurance and got dirt cheap interest rates because it's guaranteed. They're guaranteed to always make money. They never lose it. Whole Life is the only one that does this. Same thing happened here. He used the collateral, the cash, his policy, not the death benefit, but the cash as collateral. And ABC said, that's sufficient. That's good enough. We're going to put the rest of the money in. And as you know, it's the happiest place on earth now, right? It's that place that you'll stand in line for an hour and a half and still somehow keep smiling wearing your little Mickey ears. But it would never not have been possible had he not saved up money first inside of his infinite banking policy, his whole life insurance policy. And that's the whole concept behind infinite banking. It's not just about let it sit there and you set it and forget it like everybody else teaches you to. No, it's actually about putting that money to work, right? Getting it to be used. In his case, he used it in his business. He used it to be able to invest in his business, get enough so that the partners were able to come in and create massive profits. Disneyland was a huge success for them and still is to this day. In fact, sometimes even makes up for the losses in their movies and their TV shows that are crap lately, right? They do that because they're able to create more with their theme parks. So that is the key. You could be doing the same thing. What if you're able to use that for a business venture? What if you're able to use that for even just investing, things like real estate investing, like we talk about here? What if you're able to use it to make money in two places at once? Or even better yet, just create a legacy that lasts beyond you, where you can create generational wealth that keeps increasing from generation to generation, from one child to the next, to where you're able to teach them not only just how to have money, but how to be wise stewards of their money. That is the difference. So let's just start building your little Walt Disney strategy for yourself. If you want to learn how to do that, go to moneyripples.com/infinite-banking to see what we can do for you with a whole life policy right now.